Hello and welcome to the 6th day of August 2018. This is the Money Charts channel and the Crypto Day morning. Like always, all trades best. It's your own risk, own reward within such. And on the daily term time frame for Bitcoin, which its last high and highs and lows are well known after the fact. And if this is a bottom now, well, this would be a high. And as far as lows would be concerned, well, we can obviously note that we have a low in here. Then we did make a high here. Another low here. You can count this one if you wish. You could also discount it. Overall, we've had a nice move from point A to point B. And what's important is that of making a higher low. And it can still do such, and it usually does, because when you have a rally as good as it was from the middle of July to the into the fourth week of such, then it takes a pretty good pullback to not do such, and it has had that right now of a pretty good pullback. Enough where the price has went below the 18 lows. It's been several days below it. And there has not been a single green candle up day, well, other than the one yesterday, which kind of doesn't count within such, and a lot of noticeable down days. There is a situation where we could make a higher low and higher high within the intraday moves today. Yesterday's session had a low of 68.88 and a high of 70.86.80. And today's high has already been higher at 71. The low's in at 69.16, which is about under $30 from such, and it's at the lower end. So it'll be a very interesting situation if it does happen to break through it. It doesn't have much room to go to the neckline of the inverted head and shoulders pattern, which is in the low 6,800, 68.20. So it only needs to decline at this stage a couple of percentile points to get towards that figure. When we take a look at this on a 3-hour time frame, we will take a look at the 18 average amongst such. And on this, from the declining mode, there's your 18 test in here after it was sideways, and obviously this is where the bear market of such would have been playing through for its first correctionary move. And then you'd follow that within a lower low. Correctionary phase obviously falls through that, crushes this level of support. Obviously has not been any form of resistance, not as of yet. And then after bottoming in here, it's now had several hits of its current area, which is a pierce under 69. But in this general area, it has had its correctionary phase. And as I'm looking at this currently, well, it looks as if it's leaving it. You have stage number 1, we'll call it on the 5-hour timestamp dated 0805. It hit the 18 average of highs after several periods going sideways. A little bit of a small shakedown, but then a decent 3 out of 4 run period where you had a good green candle to the 18. Then the next one, a green candle in to the average, and then a sideways consolidation, and then a nice green candle which concluded such to the 18 average of highs. We can see it hasn't been enough to make the 18 average go sideways. It's declining still at a small rate, but it's still not able to do such. The previous period from where we stand now, after it came through 2 red ones, it was a pause one within the 18 lows, and now I see it looking to leave such a case, and obvious level of key support in at about right here. And then looking on the 15-minute time frame, this is leaving its 18 average as well, and it's progressing into making a nice leg lower as well. When we look at this, just scrolling back, we can see that this was the area in which it bottomed its second leg lower, or because it didn't do so on the 4th. And it had this little bit of a rally, came back to where it came from, had a bigger rally. What would have been productive on this term time frame, which is 15 minutes, would have been to find a bottom in at about 7,000. Didn't do that. It has rather resisted amongst that level. So when we take a look at this on a further basis, we'll do so first within Fibonacci from the 20,000 highs and the lows of below 6,000. The last move that it had was a large pierce above 23.6, halfway between the 23.6 and the 38.2% level, and then resisting along the way. So it's in that of a severe bear market, making a good stance for breaking new lows when it's in such. And breaking down below, of course, that's where the 3,000 is in place. It's in bear market status still if it's below the 38.2. Between these two lines, I set that in as a neutral status, question mark, trying to find decision sort of deal. Bull market status up and towards here, like a standard one. And then breaking above, you're in, well, severe, I guess, whatever, extreme, bull market on this level, looking to make new highs along the way. Looking at the Fibonacci retracement from this high next towards the most recent low. What I see in here is it got up to the 61.8%, which was an attempt to end the down move. For if it gets past, holds, and stays above this second level or this upper level and such, then that would tell me that this move would be that of an immediate failed one, and you would expect continuously higher prices for at least another decent portion leg higher thereafter. But it didn't do such a thing, and it's also not finding support where you would like to see it here. Now, granted, with that being stated, I stated from the beginning that there was that I like the look of this neckline area for that support area where it's testing in right now at that 68 point, just because that seems to be how the story always seems to go when you have a big level of resistance that isn't major, like it's worth a lot when you see it before the breakout. And this was the case, that if it's going to have a nice small break above it, come back to it, that's the sort of thing that I'm looking for where it would come back towards. Throw in the fact that I also expect these markets to pierce extra amongst Fibonacci, that I felt a move to where I see it now as an okay pierce, and that would be such the case. So whether this actual move that occurred from June 29th into July 24th, 25th area, if it's going to be real, then at some point soon it's going to have to bottom. You're going to see it react within the 18 on a productive level and then move forward after it. But because of the very long-term time frame, if it goes through and it resists within this area, I've been talking a lot about another significant leg, because this low price action is old news. That happened back in the end of January, start of February time frame. And it's been the entire run since, 6 months since early February, of continuous slower highs and holding that particular key area. But when you're holding it and not productively doing anything on the bullish level, well, that's why we have this descending triangle kind of situation. And it's one of those situations where it's got to make a decent decision. And for what it's worth, it just means to me that if I'm going to see a new leg lower, new leg higher kind of action, I expect it to be of a decent proportion, something that passes the eyeball test. Not too big, not too small. And mathematical Fibonacci already had about 6,800 as the area for the 23.6 down, which was a phenomenal hit. And therefore, with 38.2% being a hair above 3,000 or 3,100-ish or so, that to me passes approximately where an eyeball test move would come down to if such an event takes place. And when it comes down to it all, when it's all said and done, the bullish level will break out on any type of bullish sentiment breakout. It's got to do something about getting past these types of downtrends. I've mentioned on this here, well, it's a descending triangle. And finally, on the 3-day, this is what I look for in reversal of trends within the 18. First, I want to see the band flatten out, which occurred here, and then establish a level of resistance. Again, that eyeball test matters for me. I don't like it when it's way too high, because then you have to it's more complicated. But a decent move, not too small, not too big, that was pretty much just right. Enough where it has the 18 to start to rise, enough where it takes a decent enough move to get back to the 18 lows. And this was a decent enough move. It's now back to such. It's had step number 3, which is correctionary move somewhere within the 18. And then to take a move, get above a clear break above resistance. And that's what I would consider to that, or how I concern myself to change a direction from one to the other. And in attempt, when you look at this like a game, a card game, or just any type of physical battle game, if you attempt to do something and you fail within your attempt, well, that's not good. And therefore, that's why when I talk about failed move and all that type of stuff, well, this is no exception, because it's made the move, it's made that attempt, it stopped the selling in July, and therefore, if this 18 average shows weakness, that I'm going to be considering it now to be, again, once again, to be a high probability of a move that could take it down to that 3,000 handle. Now, it wouldn't surprise me if some of this ETF stuff even works out and there's like whatever going on beforehand, and maybe even by August 14th, 15th, or 8th, I think it's even in September, I don't know, but maybe like in 4 weeks, you have a move that comes down there, and then 4 weeks later, you're back again. Those types of situations are obviously possible too. And I'm not going to say when it gets down to 3,000, oh, it's definitely a bottom, it's time to load the boat, all that type of stuff. By no means, no. I'll state that the next Fibonacci level is 1,000 thereafter, but I'd be expecting a high chance of a bounce at 3,000. And that's something I would expect to happen both bullishly and bearishly. Of course, if it's going to be bullish and that's a key low, of course it's bullish to buy there. But if, say, for example, 1,000 were to come, I would like the chances of the market having a move breaking 6,000 from 3 before going to 1, meaning a move up towards that level that you see there, and then either immediate move down or just something like that. Again, I'm not saying that's what I predict to happen. In fact, I don't predict that to happen. I just know that if the situation were to do such an event, and if such an event is break a key level of support, that's where it would be heading down towards. So I'd like to thank you for tuning in to today's video, and have yourself a great day. Bye-bye.